Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Today is Sunday. We are heading into a week full of events. So I wanted to share with you some thoughts on the upcoming events. So I wanted to share with you my analysis on some of the stocks for the upcoming week as traders. I am a long-term growth stock investors in Nvidia, Amazon, Tesla, among other things, but I also want to analyze them for the price actions in the short term so that I can capitalize on the volatility. If you are new to my channel, please consider subscribing. I am a growth stock investor and a trader, and I'd love to share with you my investing and trading journeys. If you find that my weekly market predictions helpful to you, please go ahead and subscribe to this video and let me know down below if you are interested in this type of weekly information. I'd love to share with you my analysis. I do my own analysis every single week, especially on Saturday and Sunday. And if it is helpful to you guys, I definitely make regular videos to share those analysis with you guys. But without further ado, let's get right into it. So last week, the market started out with an insane move on Monday. It had a major gap down. I'm looking at the S&P 500 here. And then throughout the week, the S&P 500 started climbing back up and reclaimed 50 days SMA. So this is a very good sign for the bulls in general. And so we're trying to figure out what to expect for next week. The news media has different opinion of what to expect in this coming week. Market insider tend to think that stocks face another turbulent week as the third quarter winds down, and I tend to believe that is the case. However, turbulent does not mean that the stocks necessarily have to be bearish. It could also be bullish but high volatile. Many different other news outlets provided us with what to expect in the upcoming week for the stock market, 3 things to watch out for the stock market this week, and so on and so forth. Still others believe that the Evergrande debacle signifies a calm before the storm. Other retail investors were worried whether or not the Evergrande debacle could bust the U.S. housing bubble. Now, whether we are in a U.S. real estate bubble, I think that is very hard to tell, and I can make another video to break that down based on my understanding. Right now, we are obviously in a very unique situation between low interest rate, high inflation, coupled with the fact that the work from home trend or the remote work environment permeates across the United States. So real estate in the suburban areas inevitably increase, but does that mean we are in a housing bubble? Once again, it could be a topic of debate for another day. Others believe that with China rising in power, this is right now a power struggle between China and the United States, and whether or not the United States will continue to dominate the global market is a question mark at this point. So far, the U.S. stock market has been doing wonders, continue to go up and up and up despite the pandemic, whereas the stock market in China has been moving down. So we definitely see divergence between the U.S. stock markets and the Chinese stock market. What does that mean for the U.S. stock market in the coming week? And that is a very important question. As traders and as investors, how do you balance all kinds of informations across different media platforms in order to make an informed decision, both for your portfolio and for your next trades? So here we are going to break that down, beginning with technical analysis, and we are going to go through a few different stocks, large cap, medium cap, and small cap, so that we have a good idea what to expect in the coming week. First, as I mentioned, the S&P 500, represented by a spider here, had a gap down, lost 50 days SMA on Monday last week, and then start reclaiming back. It ended the week above 50 days SMA. 50 days SMA right now is 442.54, and it ended the week at 443.91. The all-time high for the S&P 500 is not far above. It is only another $10 at $454. So I do think that there is a very good chance that the S&P 500 could reclaim the all-time high. Where would it go from that all-time high is a different question, because if it does get back up there, that could be a double top. And if it does not spike through the previous all-time high with volume, we could potentially see a big correction down from there. The volume for Spider on Friday was 87%, but if you notice, the previous days it had been having crazy volume for the last probably 2 weeks. So this yellow line here represents the average volume for the last 30 days. And as you can see, that beginning with around September 8th or so, volume has been consistently at 100% or better. And even last Friday at 87%, which is not too bad. 50 days SMA served as a very strong resistance. It used to serve as support and now serve as a strong resistance. So we'll have to see if the S&P 500 can spike through it on Monday. I think it can, given the fact that there seems to be a lot of bulls just waiting to buy this market. Federal Reserve also signals that it would not be raising interest rates in a harsh or expedient manner anytime soon. The real estate market has slowed down a little bit as a matter of seasonality, but it has not necessarily crashed or corrected. So I do think that all in all, the S&P 500 have more room to grow. Now we are also at the end of September. We're heading into the final week of September, and beginning October, we will see a lot of different companies, major technology companies, as well as other big cap companies announce earnings in the month of October. It could be a catalyst for a bearish move, but it could also be a catalyst to propel stocks even further. For example, you know, I'm a big fan of Tesla, and if Tesla is announcing the quarterly results for October, I think that is a potential catalyst for the stock to move higher. I think Amazon did not have a great quarter last time from an earnings report standpoint, even though the business was still very strong. This quarter, it could take back what has been slowing it down for the last quarter. Similarly, if you're looking at the QQQ, which is a representative for the NASDAQ, the story is pretty much similar. On Monday, the ETF gapped down and then started moving back up. So on Monday, it went below 50 days SMA, but as of Friday, the end of the week, it is above 50 days SMA. 50 days SMA right now is at $370. The all-time high for the QQQ was $382, so it has about another $10 to go, $9 something to $10 to go. So the story is very similar to the S&P 500. Once it falls below 50 days SMA, it bounced just like the previous times. This time was a very quick bounce. Of course, anything is possible. We can still see it falls back down below 50 days SMA and moving back up. But once again, with the earnings seasons around the corner, we need to have a catalyst for the QQQ to spike through all-time high or to retrace back and fall below 50 days SMA. For perspective, and on the bearish side, 200 days SMA is at $339. So round number 340, we're at 373. That is another $33 for the QQQ to fall down to 200 days SMA. And that's usually what happens when we are in a correction. Stocks tend to fall first below 50 days SMA and then touching 200 days SMA. If stocks fall below 200 days SMA, then we're definitely in the bear market. For now, the bulls have reason to celebrate because I do think that the QQQ holds on to the 50 days SMA pretty well. The volume on Friday was 100%, so needless to say, it still have a pretty incredible run for the last few weeks, and it does look to maintain this pattern. If it does hold this area but doesn't spike up and consolidate around here, we might see a head and shoulder. So if you were to envision the left shoulder here, the head here, and the right shoulder here. So for the QQQ to continue bullishness in the next few weeks and few months, I'd like to see it spike up, back up to 382 and above it pretty soon here. hopefully into mid-October. If the QQ consolidates around here for the next couple of weeks, then we could see a head and shoulder, and it could fall back down to 200 days SMA. To the individual stocks, let's start with Amazon. Amazon is right now reclaiming 50 days SMA by just a little bit. 50 days SMA is 34.18. The stock ended on Friday at 34.25 with 3 consecutive days of bullishness. So right now I'm looking at this gap created from the last earnings season. I'm hoping that Amazon could fill that gap before heading into this coming earnings season, but that is still a big if at this point. Amazon still has a mini gap to fill from last Monday when everybody gaps down. The S&P 500 and the QQQ filled the gap, but Amazon did not. So this gap started with the upper end of the gap at 34.62. Amazon gapped down to $33.95, so about $70 give or take last Monday, and it has not gone back up to fill that gap. Amazon needs to get back up there, which is around $34.62, so that is about $35 from here. On Monday, I would very much like to see Amazon fills the gap in order to continue to have hope that the bull run is still here to stay. So it's definitely run a little bit different than the QQQ and the S&P 500. The volume is only 73% as well. So I'm not entirely optimistic about Amazon bullish run, unlike with the SPY and the QQQ. But I do think that it could also be looked at as an opportunity. So when the stock hasn't run too fast and furious, and if the general sentiment is bullish, eventually it will be bullish, right? And it could give us an opportunity to buy a call option for a relatively good price. But I'm not yet in any position in Amazon only because I need to see it move up a little bit more. From a weekly chart analysis, this is a very bullish hammer. Although the weekly gap is still here, it has not filled it. And so it is cause for concern. I would very much like to see Amazon fill the gap. If Amazon get to 34.60, which is when it fills the gap, then the next price target is 35.30, and then you would potentially see Amazon fill the gap at 3600. Amazon's all-time high is at 37.73, which was created before the last earnings. So I'm hoping that Amazon will go back up there before leading into earnings this quarter, but that is only 3 weeks away or 4 weeks away. So time is definitely against us. I say this time and again, and I know it hasn't really materialized the way we'd like it to, but Amazon has a giant weekly bull flag that has been there since March of last year. And so I think we are looking at a potential breakout in Amazon. All we need is a catalyst, and we don't know what kind of catalyst that is. It could be earnings catalyst, it could be merger and acquisition. We don't know what it is. But as a long-term shareholder in Amazon, with Amazon being the second biggest position in my portfolio, I have nothing but time. I plan to hold on to Amazon for at least another decade. So as much as I observe the technical analysis here and look forward to Amazon going back up to 3,700 and beyond, I don't necessarily care where it's going. And if Amazon slides down below 3,300, I will definitely add shares. So that's where I am with Amazon. Palantir still shows a pretty much interesting sideways chart pattern, but if you're just looking at from around April-May timeframe to here, we are seeing a double bottom at around $19-20, and it has been moving up. If you're looking at the entire chart since the stock went IPO, it looks like a bull flag On the weekly, with this being the flagpole and this being the body of the flag, although it did have an initial breakout that hit the high of $45, the bull flag is still not canceled, and I think that the second price target could be somewhere up in the $70 area. How do we get there? From a fundamental standpoint, I think Palantir still has a lot to prove itself. It has dominated in government intelligence, and it has been doing really good work for the U.S. government. But on the private and commercial space, I do think that it needs to prove itself a little bit. The future definitely will side with Palantir because data is everything. Data is the basis for AI, which is where society is heading to. So I think that as a company that has been gathering data and advising based on the various software collecting data, Palantir is in a unique position to add value to society and to shareholders. So I'm not concerned as a long-term shareholder of Palantir. But from a trading standpoint, I think that we are just looking at consolidation. So I'm not too quick to jump in any position at this point. I'm just holding on to my share. So if you're looking at the last earnings, which was around May timeframe, Palantir is having a pattern of a lower high and a higher high. So right now it is at a higher high. It could correct a little bit, going back down to $25, which is 200 days SMA, and then continue to spike back up. The next leg could get it to about $37, which is another higher high. Let's talk about ROKU really fast. ROKU is forming a death cross. As you can see that the white line, which is the 50 days SMA, is about to cross through the red line, which is 200 days SMA. So it is cause for concern if you are a shareholder. It definitely does not look good for the bulls. And the next support level would be around 289 and then 273. I certainly hope that ROKU won't get there, but given the fact that it is trading well below 50 days and 200 days SMA, a death cross is being formed. From a technical standpoint, it doesn't look too great for ROKU right now. If ROKU gets to about 280s, I would probably pick up some more shares, and depending on where RSI is, I might pick up a call option. But first, I'd like to see this death cross play itself out first. Here's the chart for Shopify. It is the stock that I trade and I don't own. So the long-term potential of Shopify is not super important to me at this point. But as a trader, I do think this is a head and shoulder pattern, and Shopify could continue to fall down to the first support would be 1362, which is about $80 from here. You can see that last week, unlike the rest of the market, Shopify could not pull through and did not end the day above 50 days SMA. It actually retraced down pretty heavily on Friday, down over 2%, when the rest of the market was green. So I think that on Monday and the rest of the week, Shopify could potentially fall a little bit further down to the next level of support, which is 1414 and potentially 1395. If Shopify has a big gap up on Monday, I think that would be a good reason to enter a put option. If it does have a gap down, I'm not sure, because my general direction is still for the stock to move down and not move up. So I'm still going to watch out for opportunities to enter put options instead of call options. Of course, anything could happen, and I'm happy to plan for the upside as well, but I want to see volume first. Shopify could get back to about 1475 first, which was the end of the day on Thursday last week before this retracement. If it does get back there, I could consider a call option for it to hit back at resistance at 1510. Let's talk about the elephant in the room, Alibaba. If you are an investor, it is insane not to pick up some shares in Alibaba right now. Alibaba has been going through some very rough time. First of all, a death cross was formed way back in February of this year. At the time, Alibaba was trading at around $266. It has been moving down non-stop, and as of last Friday, it is trading at $144, half of where it was when the death cross was formed. The 50 days SMA right now is at $178, which is about $30 from here, and 200 days SMA is at $219. If you notice that all of my lines here, you can see that there are a lot of gaps that Alibaba could fill on the way up. So all of these are gaps down. So Alibaba first gap is from 176 to 182. Then from 184 to 191. The next gap to fill is from 198 to 205, and then from 205 to 211. So unless and until Alibaba goes all the way up to 211, all of these gaps are not filled. And usually, from a technical standpoint, a gap is almost always filled, especially gaps down like this, and for a stock that has really strong fundamental like Alibaba. I know that a lot of us been talking about whether Alibaba could be delisted in the U.S. stock market, creating fear among U.S. investors. And if that's the case, our investment could be worthless if we are in Alibaba. I think that the Chinese companies will continue to need capital from the U.S. stock market as well as the rest of the world. I don't think that we would be delisting Alibaba anytime soon. There was a strong possibility under the Trump administration, given the relationship between China and the U.S. I think that tension has been lifted a little bit. Not to say that there is no tension or that we won't be delisted. I think under the Biden administration, it is a little bit less likely to escalate the tension. And right now, the Chinese government obviously trying to control the big businesses, but I do think that it does not want to fail the businesses that originated out of China. Alibaba is definitely the pride of the Chinese economy, and I think it should be allowed to operate as freely as possible, and it should allow for U.S. capital and U.S. investment. At this level, I think with the subtracting the risk for delisting, I think at this level, Alibaba represents an extremely good odds for a return. And even if Alibaba just makes its way back to 200 days SMA at 219, that is still a very good set of returns. So the risk versus reward is too attractive for me not to enter. So I could consider longing a call option, a leap call option in Alibaba, either to 2022 or 2023 or possibly 2024 if I can afford to forget about it. So this is it for this video. I hope you find the information helpful. Thank you so much for supporting the channel, and I really appreciate your attention thus far. If you have any stocks that you'd like me to analyze, please comment down below and I will do my best to include it in my next week's analysis. Thank you very much and have a good day, and until the next video, bye.